If you looked at the market, say, 72 hours ago, Friday afternoon, you probably wanted to close your laptop.
Oh, absolutely.
Maybe throw it in the ocean and pretend the internet didn't exist for a bit. We were staring down trade war escalations, systemic fragility, just this general sense of doom. But if you look at the screen today, Monday, February 9, 2026, it is a completely different world.
It really is a case study in market psychology, isn't it? We've gone from systemic fragility to what I'd probably call calculated stabilization.
In the blink of an eye.
And frankly, while the price action tells one story, that nice big green candle on the chart, the structural shifts happening underneath are telling a much, much more important one.
That is exactly what we are here to unpack, because today isn't just your standard number go up price update.
Not at all.
We're looking at a massive reclaiming of that $68,000 level, sure, but the why matters so much more. We have 3 massive pillars to get through today.
Right.
First, the mechanics of this short squeeze, because the liquidation numbers are honestly staggering.
They're huge.
Second, a huge geopolitical shift with Russia's largest bank, Sberbank, officially weaponizing crypto infrastructure.
That is a massive development. I don't think people are paying nearly enough attention to what that means.
And third, the Asian pivot. South Korea is rolling out some sci-fi level AI surveillance, but paradoxically, it's actually opening the door for massive corporate adoption. So, grab your coffee. We have a lot to get through.
Let's do it.
Let's start with the forensics. We saw a V-shaped recovery that just, well, it ripped faces off.
Rip faces off is the technical term on the trading desk, I believe. But yes, let's look at the anatomy of this move.
Okay.
We saw Bitcoin reclaim $70,000 really, really rapidly. But to understand this, you have to understand the setup. We went into the weekend with what we call weekend liquidity paralysis.
I saw that term in the briefing notes. It sounds like a medical condition. Like, I can't come into work today. I have liquidity paralysis. What does that actually mean?
It's not far off from a medical condition for the market. Think about it like this. The big institutional desks, the guys at BlackRock, Fidelity, the market makers moving hundreds of millions.
Yeah.
They go home on Friday.
Right.
They turn the algorithms off or they set them to passive. So liquidity becomes incredibly thin.
So it takes less money to move the price?
Precisely. It becomes very easy to push the price around. So what happened this weekend? The price started to drift down on low volume. It looked weak.
Okay.
To the average retail trader watching the charts at home on a Saturday, it looked like the sky was falling. They see red, they panic, and what do?
They start opening short positions. They bet against the market.
They fell right into the trap.
A weekend trap.
They walked right into it. They over-leveraged themselves betting on a crash because the smart money wasn't there to defend the price. But the moment Asian markets opened Sunday night,
and the institutional flows returned.
the liquidity came flooding back. The price just snapped up, and all those short positions were underwater instantly.
And we have the receipt for that damage. I'm looking at the liquidation heat map. $204 million wiped out in the last 24 hours alone.
It is a staggering amount of money to vanish overnight. But the most telling part isn't even the total number.
It's the ratio.
It's the ratio. We had $144 million in short positions liquidated versus only about $60 million in longs. That's a 2.4 to 1 ratio.
And just to clarify for everyone listening, because we throw these terms around, a short squeeze isn't just people buying because they like the asset.
No.
It's people buying because they have to.
Exactly right. The fuel for this rally wasn't new bullish sentiment, not initially. It was bearish traders who were forced to buy back Bitcoin to cover their losses as the price ripped against them.
So they became the buyers.
They became the buyers that pushed the price back over $70,000. It's brutal.
Brutal if you're on the wrong side of it, but it does validate that the market was oversold. And speaking of validation, I saw a note from Bernstein Research came out today. Gautam Chugani is usually pretty level-headed. What's his take on this?
He released a note that I think provides the narrative air cover that institutions needed. He called this the weakest bear case in history.
Wow, that's a pretty bold claim, given how panicked everyone was on Friday. Is he just being a cheerleader here, or is there data behind that?
No, the data supports him completely. Look at his reasoning. In 2022, when we had the big crash, we had dead bodies.
Right, FTX, Terra.
Celsius, actual insolvencies, fraud, criminal trials. The market structure was physically broken. Right now, who is insolvent?
No one.
No one. We haven't seen a single major entity collapse. We just had a crisis of confidence driven by scary headlines.
So the plumbing is fine. It's just the vibes that were off.
Essentially. And so Bernstein reiterated their $150,000 price target for 2026.
Okay.
They're telling clients, look, the network is healthy, the ETFs are flowing, don't get shaken out by a weekend drift. And that gives portfolio managers the permission slip they need to step back in.
And part of that network health comes back to the miners. We saw that difficulty adjustment.
It's a crucial point. We
Yeah.
each had a negative 11.16% difficulty adjustment. That's the network healing itself.
Okay.
It lowers the cost of production for the miners who are still plugged in. So the capitulation phase where miners are forced to sell everything just to keep the lights on,
That's likely over.
that's likely over. The selling pressure is lifting.
Okay, so the market mechanics are stabilizing. But now I want to pivot to what I think is the scariest or maybe most fascinating story of the day. We need to talk about Russia.
Yes.
Specifically, Sberbank.
This is the so what moment of the whole deep dive, I think. Sberbank isn't just a bank. It is the bank in Russia. It is state-owned.
Right.
And today, February 9th, they officially announced they are launching crypto-backed loans for corporate clients.
Let's bring that down.
Yeah.
How does a crypto-backed loan work in this context? Because you'd think banks would hate the volatility.
It is surprisingly similar to what we see in DeFi,
Yeah.
just at a sovereign level. A Russian corporation, let's say a big miner or an importer,
Yeah.
can pledge their Bitcoin as collateral to the bank.
Okay.
In exchange, Sberbank gives them a loan in fiat currency, most likely rubles.
So they don't have to sell the Bitcoin.
Correct. And that is the vital part. Previously, if a Russian miner needed cash to pay for electricity or new hardware, they had to dump their Bitcoin on the open market.
Creating selling pressure.
Exactly. Now they can hold it and borrow against it. It acts as a massive state subsidy for their entire mining industry.
But there's a bigger geopolitical angle here, right? This isn't just about helping out some miners.
No, this is about sanction evasion. It's financial weaponization. If you are a Russian company, you are cut off from SWIFT. You can't easily use Western banking rails. But if you can use crypto as collateral within your own domestic banking system, you create a parallel financial rail. You are effectively rubleizing Bitcoin.
Rubleizing.
You're turning it from just a speculative asset into a recognized industrial commodity inside the Russian economy.
It's the state basically saying, we value this asset and we will let you bank with it.
Precisely. It validates the entire sovereign adoption thesis.
Yeah.
We used to talk about El Salvador buying a few coins. Now we're talking about a G20 nation's biggest bank integrating it into their corporate credit market.
That puts a real floor under the price, that Bitcoin isn't leaving Russia.
It's being locked up in Sberbank's vaults as collateral. It's off the market.
That is a wild shift. It feels like we're entering a phase where Bitcoin is less about internet money and more about being a strategic reserve asset.
That's the reality of 2026.
Okay, let's fly east. We've got Russia effectively locking up supply, but South Korea is making moves that seem kind of contradictory at first. They're rolling out an AI panopticon. That sounds like a dystopian movie title.
It does, doesn't it?
Yeah.
The Financial Supervisory Service, the FSS, released their 2026 oversight plan today.
And what's in it?
They're deploying AI-driven surveillance systems to monitor the crypto markets in real time.
What are they looking for? Is this just, checking if I paid my crypto taxes?
It's much more granular than that. They're looking for wash trading. They're looking for whale containment schemes, mapping relationships between wallets.
Wow.
It's not just looking at the order book. It's analyzing social signals, text data, trying to find manipulation before it happens.
That sounds incredibly restrictive. So why is this a good thing? Usually regulation like that sends people running for the hills.
Because it's the trade-off. It's the bitter pill that buys the cure. The FSS is effectively saying we will clean up this market and make it safe so that we can open the floodgates.
And the floodgate is.
The other big news from Seoul today, they are lifting the 9-year ban on corporate crypto trading.
That seems huge. Companies in Korea haven't been allowed to even hold crypto on their balance sheets.
Not legally, no. But now, listed companies can invest up to 5% of their equity capital into top 20 cryptocurrencies.
5% of equity capital. I mean, we talk about MicroStrategy here, but just imagine if Samsung or LG decided to put even 1% of their cash reserves into Bitcoin.
That's the wall of capital we're talking about. South Korean corporations are sitting on massive cash piles. This regulation just unlocked that capital.
So it legitimizes Bitcoin as a corporate treasury asset.
In one of the most tech-forward economies in the world, yes.
It's so interesting to contrast that with the U.S. I was reading about the White House meeting scheduled for tomorrow about stablecoin yields. It feels like we're still arguing over the absolute basics.
While Korea is building the infrastructure for the future, it's a classic geographic arbitrage. The U.S. is deadlocked. The banks hate stablecoins paying yield because it competes with deposits.
Sure.
The crypto guys say it's necessary for innovation, so they're just having meetings. Meanwhile, Korea is saying, here's the AI surveillance, here's the corporate permission, let's go.
And capital flows where it's treated best.
Or at least where the rules are clearest.
So we have Russia locking up supply for loans and Korea unlocking demand from corporations. That sounds like a recipe for a pretty serious supply crunch.
It is structurally very, very bullish. These aren't retail traders buying $50 worth of Dogecoin. These are structural industrial scale flows.
Speaking of industrial flows, we have to talk about the miners. It really is a tale of two cities right now. You have the survivors and then you have the accumulators.
It really highlights the post-halving reality. On one hand, you have a company like Sphere 3D. They just announced a 1-for-10 reverse stock split today.
Ouch. A reverse split is never a sign of strength. Explain to the listener why a company does that.
Well, usually it's to avoid getting kicked off the stock exchange. The NASDAQ has a rule that your stock price has to stay above $1. If it drops below that for too long, you get delisted. So Sphere 3D is basically combining 10 of its shares into one to artificially boost that price back up.
It's purely a survival tactic.
Exactly. And it's a shame because they are efficient. They got their fleet down to 19 joules per terahash, but the sector is just brutal right now.
Right.
If you aren't absolutely massive and hyper-efficient, you are struggling.
And then on the other side of that spectrum, you have the behemoth, MicroStrategy.
Of course.
They filed an 8K this morning.
The great accumulator. While Sphere 3D is fighting just to stay listed, MicroStrategy confirmed they bought another 1142 Bitcoin between February 2nd and the 8th.
So while everyone else was panicking about the trade war and the price drop this weekend, Saylor was buying.
He was. They spent about $90 million at an average price of around $78,815. They now hold over 714,000 Bitcoin.
That number is just absurd. 714,000. It's becoming a black hole for the asset.
It is. But the takeaway is the divergence, the weaker restructuring to survive. The strong capital allocators are buying the dip. It's a consolidation of the industry happening in real time.
We should probably touch on the geopolitical backdrop quickly. Iran. There was some tension over the weekend about a red line.
Yes, Foreign Minister Iraqi spoke today. He rejected the U.S. demand for zero enrichment of uranium. He basically said, this is our right, and your aircraft carriers don't scare us.
Usually, rhetoric like that sends markets tumbling. Why didn't we crash?
Because it's kind of a Goldilocks scenario for crypto. It's tense enough that people want non-sovereign assets, they want gold, they want Bitcoin.
Right, the hedge.
But it's not an immediate hot war that sends everyone fleeing to cash and U.S. Treasury bonds. The market sees it as an entrenched standoff, not the start of World War III.
Got it. So uncertainty is good, but catastrophe is bad. We're in the sweet spot of uncertainty.
Precisely. The war risk premium is fading, but the hedge narrative stays.
All right, let's talk about where the traders are looking now. We saw a lot of chatter about DePIN and something called Spacecoin. What is going on there?
This is where the regime alignment theme comes in. Spacecoin ticker SpaceSaw, massive volume, over $75 million. The catalyst was a Binance futures listing.
Which usually just means the big boys can now use leverage to bet on it.
It unlocks leverage, yes. But the narrative is what really matters here. Spacecoin is building a decentralized satellite network for internet access. And recently, they partnered with World Liberty Financial WLFI.
That's the Trump-linked project, right?
It is. And that connection is what's driving the price. The market is betting on projects that align with what are perceived as U.S. strategic interests.
Like internet freedom.
Internet freedom. Bypassing censorship and authoritarian regimes via satellite, that aligns perfectly with U.S. foreign policy.
So it's not just a utility token, it's a political beta trade.
Exactly. It's the intersection of decentralized physical infrastructure, DePIN, and a political utility.
Yeah.
In a world where trade wars and sanctions are the norm, a decentralized satellite network has real strategic value, and the market is pricing that in.
It's fascinating how the narrative shifts. It used to be all about privacy coins and, hiding from the government. Now the hot trade is the coin that helps the government's foreign policy goals.
Adaptation is the name of the game.
So let's wrap this up. We started the show talking about a structural reset. We've seen the price heal. We've seen the miners heal. What's the big takeaway for the listener today?
The big takeaway is that the price floor for Bitcoin isn't just about retail sentiment anymore. It's not about whether Reddit is feeling bullish.
Right.
The floor is being structurally reinforced by Russian banking rails and South Korean corporate treasuries.
That's the sovereign put?
That's the sovereign put. When a state-owned bank and major conglomerates are involved, the entire asset class changes. The volatility might still be there, but the zero case, the idea that all just goes away, is effectively dead.
And that leads us to a pretty provocative thought to leave you with.
Right. We spent years calling crypto the Wild West. But just look at today's news. Russia is using it for corporate loans. Korea is using AI to police it. The U.S. is negotiating stablecoin yields at the White House.
It's becoming regulated, institutionalized.
So are we seeing the end of the Wild West and the beginning of the state-sponsored era of Bitcoin? And if so, does that change why you own it?
Something to chew on while you watch the charts today. Thanks for diving deep with us. Stay curious, and we'll catch you on the next one.